Lately, I've mainly focused on American REIT investment opportunities on this channel, and this has led quite a few of you to ask me to also share some of my European top picks. In some ways, the European REIT market is today even more compelling than the American one because valuations are even lower and the growth rates of some property sectors in Europe are greater than in the US. But what's my favorite opportunity in Europe today? Hey everyone, this is Jussi. I run a small investment firm that specializes in REIT investing, and in today's video I'm going to talk to you about Big Yellow Group, which is my biggest European REIT investment at this moment. But before I get into it, could you please do me a favor and like this video? It will really help me a lot to grow this channel. Thank you very much for your support. So to start this off, I would like to ask you a question. What do you think has been the most rewarding property sector in the US over the past 30 years? Here, most of you would probably answer cell towers, data centers, or even industrial properties which have greatly benefited from the growth of e-commerce. But in reality, the most rewarding property sector in the US has been self-storage over the past decades. Self-storage REITs have managed to generate nearly 20% average annual total returns over the past 30 years, and this is truly exceptional when you consider that this was also the least volatile of all property sectors. I think that American self-storage REITs were so exceptionally rewarding because of three key reasons. The first reason is that they enjoyed very significant organic growth prospects. This is one of the few property sectors where scale and professional management has major advantages. In the early days, REITs were able to buy individual self-storage facilities, they would then integrate them as part of their portfolio, and then they would implement revenue optimization systems, and then the properties would also benefit from national advertising campaigns, better branding, and stronger marketing strategies. This would allow the REITs to significantly boost the net operating income of individual properties in short order. To give you an example, they might have bought a property at an 8% cap rate, they might have then implemented all these improvements, and in short order the property would have been yielding materially more. Then the second reason why these REITs were so rewarding is that the external growth prospects in the self-storage sector were also above average. As the demand grew for self-storage, these REITs developed properties all over the place, often earning very attractive returns on their investments. Typically, the stabilized yield of a newly developed property will have been nearly 10%, and yet the cost of capital of these REITs were also below average, resulting in significant spreads. And then finally, the third reason why self-storage has been so rewarding is simply that this is a resilient property sector that doesn't suffer much during down cycles. A lot of property sectors did really well during times of economic expansion. Hotels would be a good example here, but then they suffered very significantly whenever a recession would hit. Self-storage facilities, on the other hand, have been able to perform relatively well in most market conditions, and this is because people still need to store stuff even if we hit a recession. In fact, in some cases it may be even cheaper to downsize a home, move to a smaller place, and then store the extra stuff at the self-storage facility. Similarly, for a business it may be cheaper to move into a smaller office and then store the extra stuff while the economy is doing poorly. And for this reason, the demand for self-storage has been quite consistent over the cycles. So I think that these are the three key reasons why self-storage REITs have been so exceptionally rewarding in the US over the past 30 years. But unfortunately, this is not a secret anymore. Most investors have witnessed these returns, and as a result, this sector has attracted a lot of capital. Developers have built new storage facilities in every corner of the nation, new REITs have emerged, and the competition is today greater than ever. This doesn't mean that these American self-storage REITs will do poorly going forward, but I think it's very likely their future returns will be much lower than in the past. This brings us to Big Yellow Group, which is the biggest self-storage REIT in the UK. I think that it is set to replicate these exceptional returns in Europe because the European self-storage market is today 30 years behind the USA. It is still a fairly new concept, but it's now rapidly growing in popularity. Today there is about 10 times less storage space per capita in the UK than in the US, and yet European people need to store stuff for the same reasons. People go through divorces, they move from a place to another, they need to make space for a home office now in the work from home era, and the older generations pass away, leaving a lot of stuff behind. I would add that the homes of Europeans are often a lot smaller than those in the US, and so all else held equal, the demand for storage space from Europeans should be even greater than that of Americans. But because this is a relatively new concept in Europe, not many facilities have been built yet, and Big Yellow Group is now capitalizing on this opportunity. They have now been building their portfolio for about 20 years, and the early results have been exceptional. They've managed to generate roughly 16% average annual total returns, and that's despite greatly suffering through the great financial crisis. If you adjust for that, the average annual total returns get closer to 20% per year. And the great thing here is that the Big Yellow Group is still just getting started. Its market cap is today around 2 billion, which is about 20 times smaller than that of Public Storage, an American self-storage REIT. Today, the Big Yellow Group still hasn't even expanded outside of the UK, and so this just goes to show you that it has a very long runway of rapid growth potential as it now capitalizes on the self-storage opportunity in Europe. So in a way, I think that investing in shares of Big Yellow Group today is similar to investing in shares of an American self-storage REIT 30 years ago. And in hindsight, we know that this was one of the best investments of all times, and this is why I'm so bullish on Big Yellow Group today. It also helps, of course, that following the recent REIT market crash, Big Yellow Group has seen its valuation contract very significantly. Not too long ago, it was priced at 1,700 British pence per share. Now it's down slightly below 1,000 British pence per share, so it's down about 40%. As a result, now it's priced at a very reasonable 17 times FFO, an estimated 15% discount to its net asset value, and its dividend yield has expanded above 4%. That may not seem particularly low compared to some other REITs that we've highlighted on this channel, but remember that this is a REIT with very rapid growth prospects. Historically, it's been able to grow its FFO per share by over 10% annually, and we think that it's going to be able to keep up with this rapid growth pace over the long run. I also like that this is a very defensive company with a recession-resistant business and a fortress balance sheet with low debt and long debt maturities. So when you combine here the long runway of rapid growth prospects, the attractive dividend yield, and the relatively low risk profile, you start to understand why I think that the risk to reward of Big Yellow is especially compelling today. Now, if you want to access all my other international REIT investments, feel free to join my REIT newsletter High Yield Landlord for a 2-week free trial. I'll put a link somewhere in the description of this video. And once more, if you could please like this video, that would really help me a lot to grow this channel. Thank you very much for your support, and see you at my next one. Bye bye.